business owner, you might have a great year, but given very little thought to tax. If that's the case, you're not alone. But to achieve the best tax outcome, now it's the time to give tax planning a thought. And here are some things that you should consider as the year rolls to an end. You can bring forward some deductions and then you can utilise them at year end to minimise your tax. And these things could be prepaying interest on deductible loans, writing off bad debts, maintenance and repairs expenditure, and make sure that you pay your employee superannuation contributions by the 30th of June. Pay membership subscriptions in relation to trade or professional bodies. You can meet your bonus and commission obligations. That is, you can actually pass a resolution committing to pay them, and you can pay any directors' fees that were accrued in previous years. Additionally, expenses that covers not more than 12 months period could be claimed as a deduction. And these things could be like rent on your business premises or equipment, interest, like repaying 12 months of interest in advance, any business trips and training courses, even though they can start after July 1. If you're a business using cash accounting, of course your income will not be derived till you receive it or credited. So really just consider postponing invoicing till after 30th of June, subject of course to cash flow requirements. Consider claiming deductions for expenses that haven't been paid at year end. Small businesses and non-small businesses are entitled to claim immediate deductions for certain expenses that have been incurred but not paid. And these things could include salary and wages, directors' fees, and of course staff bonuses and commissions. In case of directors' fees, one good thing to remember is that if you commit to directors' fees and accrue them in your expenses, you can claim it as a deduction, but the director does not have to include that in his tax return till the following year when he receives payment. Have a look at your depreciation schedule. I'm sure there are assets there you no longer have or you don't use, they're obsolete. Write those off. The written down value of these assets can become a very good deduction for you. If you are selling assets and you're likely to make a capital gain, consider signing the contract after July 1. That way you can postpone the income till the following year. Also, if you have a capital gain, consider crystallising some capital losses to offset that capital gain in your taxable income. Review your trade debtors and write off any bad debts. Remember, to be able to claim the deduction in that year, they must be written off. And don't forget to claim back your GST. You should conduct a physical stock take as of the 30th of June. Identify all your obsolete stock and make sure you write it off before the 30th of June. Its value could become a very handy tax deduction. Tax laws are complex and constantly changing. However, there are always opportunities to minimise your tax liability. To discuss your individual circumstances or concerns, please contact GPL Solutions. We're looking forward to hearing from you.